The index is up more than 20% from those recent lows that we saw last October. For more on what he's watching in the markets right now, we want to bring in Paul Hickey, Bespoke Investment Group's co-founder. Paul, here we go. Up 20% from those lows. I have a lot of people who are looking and thinking, oh, my gosh, if I wasn't already invested, I missed out. What do they do?
I mean, I think people have been saying that for a while. You had your chance in April. We had a pullback. I mean, people made a big deal of this pullback. It was 5%. I mean, that's very run-of-the-mill and things. But, you know, the new highs confirm that we're in a bull market. The length of this bull market since October 2022 has actually been a little longer than normal, 19 months versus the median. But the gains have only been 50%. The median bull market sees a gain of about 75, 80%. So, you know, there can certainly be more upside in the market here.
Say, which do you look to more closely, the percent of gains or the time frame?
I mean, that's just to put it in perspective. I mean, what we're constantly doing is watching what's going on in the market here. And, you know, the underlying breadth of the market is expanding. Everybody's talking about last week about how the strength in utilities was this canary in the coal mine, that things weren't right in the market. But when you look at historically, when utilities hit new highs after not hitting new highs, it has historically been just fine for the market. And then when you look within the utilities, the gains have been so uneven. People talk about the narrowness of the market rally in the S&P 500. Just 16%, or just 5 of the 31 stocks in the utility sector are outperforming the sector year to date. So it's driven by these subset of the sector which are benefiting from the hyperscalers and the demand for electricity, whereas your typical traditional integrated utilities aren't performing nearly as well.
So you're bullish. Are you bullish because of fundamentals and earnings beats that we've seen, earnings expectations for the next quarter? Are you bullish because of the momentum factor?
So it's a combination of those things. The fundamentals of this earnings season we just got through, again, coming into this earnings season, expectations, analysts were lowering forecasts, and companies came in and beat those forecasts. That low bar sets a stage for a positive earnings. The two things we're looking at going forward that, you know, you always want to worry about something are the sluggish economic data, which has been a concern. We've seen slower momentum in data and relative to expectations. The counter to that is the fact that if you are seeing periods of economic weakness, high yield spreads usually start to widen, and they've been actually narrowing. So you look back to the last 3 recessions, in the year leading up to a recession, high yield spreads were widening. Even going into the COVID recession, they went up a little bit. I'm not saying that the market knew COVID was coming, but we haven't seen that this time. High yield spreads have been trending down from 500 basis points a year ago to about 300 basis points now. The other factor to watch is that we've started to see a lessening of it is this selling into strength. Within the market overall, we've seen gaps up at the open and drifting lower in the market. And companies reporting earnings, what we've seen is they've gapped up higher about 30 basis points this earnings season, and then they've sold off about, on average, 0.5%. But what you're seeing is stocks gapping up and investors selling to that strength. So that's something to keep in mind going forward. But where we have seen an exception to that is in companies that report what we call earnings triple plays. So just put it simply, a company that reports better than expected earnings, better than expected sales, and then has the confidence to raise guidance. When the economic picture is murkier and these companies still see that clarity going forward, we're seeing a shrinking of those companies, but those are the companies we're focusing on going forward.
So maybe you think they're just being cautious. Okay.
I think companies are being cautious, but the companies that can raise guidance and have the ability to do that, that's a vote of confidence.
Paul, thank you.
Thank you.